Well, good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're sitting here now on Monday, and it is February 9th, 2026. Well, I guess we're getting into the 6:30, 6:25 area right now, so it gets to be a little interesting in the time of the evening. Now, what we had was another day up in the stock market, so you had back-to-back rallies and a number of them, and that sets me up for thinking that we're going to attempt a Tuesday reversal. It's the old Yale-Hirsch-Almanac rules. You want to take a look at a bunch of those. You know, the tried and proven rules don't go away. I hope you understand that. It doesn't work all the time, but it gives you a warning. So for me to start the day off and see a sea of red in many commodities, wow. You're getting quite a bit of it. Nothing news. No big news came out so far. In fact, talking about the news, why don't we go here and see what we're going to get? You're going to get the National Federation of Business Index. That's going to come out at 5 a.m. I'll be up. I hope you are. The U.S. Advanced Retail Sales data for December comes out at 7:30, as does the December Import-Export Price Index. Then we're going to get the fourth quarter employment cost index, and that'll come out at 7:30. Then at 9 o'clock, we move on to the November business inventories. At 3:30 in the afternoon, the API numbers. And at 11 in the morning, you're going to get the USDA WASDE report. I don't think it's a real big report, but is it going to firm up grains in a way? That's the real question. You know, beans have been running because the president asked China to buy more beans than the 12 million they committed to. Will they? Don't know. What's it mean for the corn and the wheat? Well, these reports right now give you pretty good help with it. And we do a heck of a job. If you get our QT trading platform, and it's a charting platform as well, you'll hear we record in there all the reaction we have to the report. We analyze these reports for you and give you a pretty interesting update. I think if you listen to it, you like it. David Hightower is in there. Gordy Linn is in there. Terry Linn is in there. I'm busy doing my own thing. It's the only reason I'm not in there. And my subscribers know how to get all my information. And it's a wealth of information that I provide them. I try to, at least. So we still don't know what's going to happen with the U.S. Iran situation. Each day that goes by isn't going unnoticed by President Trump. That is a guarantee. We'll see. I think the Iranians just think that each day that goes by, they're better off. Well, they are, until they're not. When we come to the S&P, you can see for the week you're up 1/3%. The market's hanging right in there. Hasn't been able on a weekly basis to fall back to the 18-week average of closes, which keeps the bias of the market longer term to the upside. When we go to the daily bar chart here, you can see how the market came up, had a big swoon last week, came roaring back, a huge outside day to the upside, and you've had some follow through from that day and today. And that's what I said. We've had some gains back to back here. Have we changed the chart pattern? No. You still have a higher high and a lower low. That doesn't tell me much. The market was able to get back to the 18-day average after sinking under that and hitting the 100. Will it come back and challenge those averages? That's what I think we're asking. Can it do that in short order? We'll find out. When you come to the Bollinger Band, that has been the support. Now, the interesting part is last year, you weren't hitting the lower Bollinger Band, you were hitting the upper Bollinger Band more often. Now in this year, you're hitting the lower Bollinger Band, which tells you with these prices, the market's finding it easier to break than the rally. The first thing you should say is, Ira, you don't know what you're talking about. The Dow Jones just went over 50,000, and you're correct on that. That's one index. That's not all of them. When you come to the S&P, you can see how the market found its support between the 100-day average and the Bollinger Band, as it's done on a couple of occasions recently. You did get under both, but you snapped back pretty hard. When you come over to the NASDAQ, you couldn't even get up to and through the 100-day average in the 18. So the trend is still down here. You still have the lower highs, lower lows. So I think the market's got a problem in the 25-55 area. When we step over to the Dow, Well, you made an all-time high on Friday, and today you knocked on the door again, as you can see, and you're holding at the resistance point, the upper Bollinger Band, in an overbought market. It's difficult to buy that new high. In the Russell, like so many of the other indices, that washout that culminated last Thursday with the reversal, last Friday actually, and caused the Friday big rally at the end of the week, which lifted the markets and then keep them down in the toilet. Got a little follow through today, but again, I don't have the patterns here that are saying higher lows, higher highs. Momentum's not locking in one way or the other. It's more of one of these type markets. When we take a look at the DAX, here too, you got to the lower Bollinger Band, and then 72 hours later, you're challenging the upper band. These aren't small moves. They're sizable for what they are. In the 10-year notes, well, the market is doing a job of keeping interest rates subdued. They're not taking off to the upside. The higher futures go, it's an inversion market. The lower real rates are going, and this market's trying to work a bit higher. 2-year notes, the same thing. You're now in a big resistance point of the green line, the 100-day average in the Bollinger Band. Just the way I told you on the downside, that's a big resistance point, so be careful. In the dollar index, all I was looking for this whole time frame, as you and I were talking, when this rally began, and you can see what I'm saying, I'll just do it here. When you crossed this high, you turned the market because you no longer had lower highs, higher lows. You had higher lows and higher highs. The objective was the combination of the 200-day average and the 18. Well, as you can see, the market got right there, and this is what it's done. And that's what we were talking about last week. The flip-flop happened in the euro as you came here, but it didn't have any moving averages, the lower ones with it. It was just by itself. But big rallies today as the markets understood that. Now, in the Japanese yen, you did see that the market started off lower today, and then it came roaring back because central bank governors were out in force going, if you start selling the yen, we are watching. And that's what they were basically doing. And they turned the market from the lower part back up. We'll see what happens because the prime minister wants to go on a real tax cutting binge. And that is not going to be looked at favorably by the marketplace. So you can play games in the market for a while, but the currency market's the biggest market in the world. It can't be fooled very long. When you look at Bitcoin, was that it? It might have been at 60,000. That was a heck of a correction. I don't have a reason to be bullish other than you lost a bearish reading. That's plenty of reason for me. I'm being facetious. So until you take this out again, I can make an argument that price and the 18-day average will spend some time trying to greet each other. And that's what I would suspect. When we look at the energy markets, keep in the back of your mind, as I pointed out over the weekend, that if India's stopping Russian purchases, they still need the oil. Russia will continue to produce oil, and they're an OPEC Plus member, so they're in that production. And China gets it at a substantial discount, big time, especially if India's out of the market. If I'm the Chinese going, well, you know, last month we got a $12 discount from this setting. I think we need 15 or 18. And who else is Russia going to be able to sell to? So this becomes it. But where's India going? India's taking the other OPEC oil that's there, and they've joined that party. Do you see what I'm getting at? The same oil's being produced, but more of it's going to probably go to China. If they don't want it, Russian prices get really hurt in the market. There's nowhere for them to go with all the sanctions. So this is how I'm looking at the market, and it's keeping it up. Plus, you can wake up at any morning now, and the president says, that's it. Iran either comes to the table or I'm ordering my forces to do X, Y, Z. You don't know where that's going. Same thing in WTI. So, no, I have nothing bearish that I see on this chart action at this point in time at all. When I look at unleaded gasoline and heating oil, I see them pulling back to the 18-day average, but that's about it. The bear part of the market's still in the natural gas. So until you take out Friday's high, have a bearish bent on the market. That's how I'd approach it. You now have a gap in the chart. It might want to go up and fill it in time. It is oversold. But the trend of this market at this point is bearish, not bullish. And that's how I am approaching things at this point. Now remember, when I put out my morning subscriber videos, I'm talking the subscriber ones, not the ones that are on YouTube here. I'm giving traders the trades I see. We follow them up in a spreadsheet from beginning to end. Here's the day it was recommended. We keep up right with it till it closes out, and then I take it off that spreadsheet. So it's not a running total. It's not meant to be a track record of anything but that one trade. I'm not trying to advise people in any way. I don't manage nobody's money but my own, and that's good enough for me. I don't want calls all day. What do you think of that? What do you think of that? I want my phone to be empty, and the reason is when I'm not disturbed, I come up with ideas, and I get to concentrate. When I'm soothing somebody, it's very difficult. And I do run a brokerage firm, and I take all those calls, but not for managing money. But if you want, as a subscriber, I invite you to write me, Ira, what do you think of this market or that market? I create a 1-minute video of a chart and go through it for you. That's included with the subscriptions. So all you need to do is move your cursor to the top here. It'll take you to our website. Go under the word research. You can click right here if you're watching me on YouTube, or iraepstein.com. I'll catch up with you in the other videos tonight, and I'll see you all first thing in the morning as we do our market review. Take care.